What is corporate bond?
Let's break this down in simple terms for beginners. Corporate bonds are a smart way to invest your money. Here's how they work and why they matter. This is your beginner-friendly guide to corporate bonds. When companies need money for growth, they issue corporate bonds to raise funds. You lend money to the company and receive a bond certificate in return. The company pays you regular interest and returns your principal at maturity. It's like lending money with guaranteed returns. Companies issue bonds to expand operations, fund new projects, or refinance existing debt. Corporate bonds provide steady income through regular interest payments. They typically offer higher returns than traditional savings accounts. Bonds help diversify your investment portfolio. You know exactly when and how much you'll receive. It's a professional way to grow your wealth. Regular income, higher returns, and portfolio diversification. Like all investments, corporate bonds carry some risks. Credit ratings help you understand the company's financial strength. There's always a small chance the company might face financial troubles. That's why researching the company and its credit rating is important. Higher-rated companies offer lower risk but also lower returns. Here's a quick example of returns. Invest Rs1,000,000 in a corporate bond at 24% annual interest for 1 year. You'd earn Rs24,000 interest and get your Rs1,000,000 back at maturity. That's Rs1 24,000 total return on your investment. A solid 24% annual return for smart investors. Simple math, smart returns. Corporate bonds make investing accessible and profitable. It's professional investing made simple for everyone. Ready to start your smart investing journey? Corporate bonds, smart investing made simple.